Dominion Energy, one of the nation's largest producer and transporters of energy, has proposed an innovative deal that could stabilize and ensure the future success of SCANA, cut rates, and pay back $1.3 billion to customers. I recently had the opportunity to speak with Carlos Brown, VP and General Counsel of Dominion Energy, to talk about the deal to acquire SCANA and what it would mean for South Carolina energy customers. Mr. Brown, how are you doing this morning?
Good, how are you?
I'm pretty good. Thanks for asking. Well, I'd like to start off. Would you first tell me a little bit about yourself and your role with the organization?
So I'm currently the Vice President General Counsel of Dominion Energy, which allows me to be the lead attorney for the organization. We're in 18 states. We're one of the leading energy companies in the country. We have about 16,000 employees currently. We are involved in the production and transmission of energy, both natural gas and electricity, with our principal electricity market being in Virginia. But we have gas transmission and distribution businesses in Ohio, West Virginia, Utah, Colorado, Wyoming, and we have gas transmission assets here in South Carolina.
Okay. Mr. Brown, could you start off? Tell me a little bit about what this merger entails and what it would mean for South Carolina energy customers.
So at Dominion Energy, what we are intending to do with this merger is to assist both the customers of SCANA as well as the citizens here in South Carolina by providing an innovative solution to a problem that was created by a number of different factors. SCANA had a power plant, a nuclear power plant it was attempting to build, where it made the decision ultimately to abandon that project. As a consequence, there's about $5 billion of debt that's out there that is burdening the company and that puts at risk the viability of the utility, as well as the investments that have been made by the citizens and investors and shareholders in the corporation. What we propose to do is to come and acquire SCANA by first providing a premium of about 30% to the shareholders so that they recover some of the investments that they've lost. But in addition, what we've done that's just really an innovation is we've also thought about the customers, the people that pay the bills, that pay the utility bills for SCANA. And we propose that we initially offer a $1,000 rate credit to each of the average SCANA customers, such that they are immediately receiving some benefit to help them subsidize the investments that they've made in covering the cost of developing the plant. In addition to that, we are agreeing to write off roughly $1.4 billion on day one of the debt that's accrued around the nuclear facility. In addition to that, we also are providing a 5% rate reduction on an ongoing basis. We understand that many of the customers of SCANA have some concern around the cost that they will be burdened with in trying to pay off the plant that was never ultimately built. And what we believe is that our solution is both creative, innovative, and is considerate of customers' needs as well as the interest and concerns of shareholders.
Now, Mr. Brown, you say rate credit. I would like for you to explain in a little more detail what is rate credit, because I know South Carolina customers want to know, are they getting a check or are they going to get a credit on their account?
All right. So let me be clear. Every customer, every SCANA customer here in South Carolina will receive a check. We use the $1,000 figure because that's about what your average customer here in South Carolina will receive if they are spending about $150 a month on their bill. So if you're what we view as the typical SCANA customer and you're spending about $150 a month on your bill, you will receive a check of $1,000, give or take, within 90 days of the closing of the merger. If you're someone who spends less, then your check may be slightly less than that. If you're someone who spends more, your check could be slightly more, but you will receive a check of $1,000. In addition to that, what we're proposing is also that you will receive a 5% reduction in your average monthly bill. And again, I don't want to get into the complicated details as to how the bill is composed, but essentially the nuclear project really represent a certain portion of each utility bill. And what what we're going to do is we're going to actually reduce the average utility bill by about 5% going forward, in addition to the $1,000 that you're receiving. In addition to that, we're also providing some additional resources, such as we're going to purchase a gas plant that will be able to provide some of the generation resources needed to help make up for the loss of the new nuclear facilities that were abandoned as a result of the decision not to move forward with that construction. In addition to that, we're going to write off about $1.7 billion worth of other liabilities are on the books currently at SCANA. Again, that may mean a lot to your average homeowner, but because we're taking that write-off immediately, that's money that the customers of SCANA will never have to repay. In addition to that, we're going to invest additional Dominion Energy dollars to continue to reduce the bill and to maintain the bill at the levels that they currently are, at least until 2022, 2023. So again, we have a very complex and comprehensive proposal, but the bottom line that the customers need to understand is that within 90 days of this merger, they'll receive a check in the mail. And if your typical average SCANA customer is spending about $150 a month in electricity, that check will be about $1,000, in addition to receiving an ongoing 5% rate reduction.
What are some of the concerns that regulators may have that you guys are addressing?
Well, the principal concern is this is unprecedented. I mean, there have been maybe no case where a nuclear facility like this has been abandoned here in modern history. I mean, I think if you go back to the 70s, maybe there were some instances like that. But in modern history, there has not been a case where you've had a major development project like a new nuclear facility being built where because of various factors, it had to be abandoned. And as a consequence, you have investors who have lent money, invested in the stock of SCANA with the expectation that they would be repaid, who are now exposed to losing all of their investment. You have customers who have, pursuant to the regulatory structure, have an obligation to help repay those investors and bondholders who've invested in that plant, and neither of them has an asset. So there is no ideal solution. So what we're trying to do is figure out a way to not necessarily make everybody whole, but we're trying to figure out a way to address some of the pain that's being felt both by the customers who are paying the bill, who have to ultimately cover some of the costs of this facility, and the shareholders who've already seen significant losses in the stock of in their shares in SCANA. I believe earlier this year, SCANA's stock was about $70 per share, and at its low, it's dropped to about $38 per share. That's roughly about $4 billion in value destruction. Again, everyone was well-intentioned, everyone was well-meaning, but the reality is that all parties have now suffered some harm. What we want to do is we want to bring this long and arduous course that the customers and shareholders of SCANA have been dealing with to a close, providing a solution that we think is a win-win on all parts. Of course, the Dominion Energy shareholders, we're going to receive the benefit of being able to enter this market, acquiring a great operating company, but we're also going to put cash in the pockets of every SCANA customer immediately, and then we're also going to reduce the bill so that they, although they'll still have some ongoing responsibility to help subsidize the cost of that plant construction, their amount will be much less.
Okay. Now, when this deal, when the project ceased, we lost about 5,000 jobs. Will this merger create any more jobs?
I can't tell you that the merger will create jobs in the short term. Here's what I can say. What I can say is that it will stabilize and help to protect a number of the jobs that are still remaining. As a result of the share value lost by SCANA, SCANA is on very thin ice with regard to being able to remain a viable company, both with regard to its ability to attract capital, to continue to do projects in the marketplace, as well as its ability to maintain its standing with regard to the regulators. So if you are a SCANA employee right now, you're concerned about the future of your company and about what's going to happen to your 401k plans and your future and your retirement and any pensions that may exist. And, we all know, unfortunately, there are large companies that people thought were too big to fail that have failed. And so it's very rare to have a utility failure here in America. But this is, again, a very unprecedented circumstance. And so what we can commit to is that we're going to come in, we're going to bring all of the best practices. We're going to try to save what is best about SCANA and what it has done well, which is great in operations. And we're going to bring some of the Dominion's great practices. And we're going to try to again, reestablish the SCANA company and its utilities as leading utilities here in the state and in the country. And with that, you will see growth. I mean, in Virginia, we've grown. We've built a number of natural gas plants. We've expanded our electric transmission network. We will invest in infrastructure and we'll invest in South Carolina. And with that investment comes additional job creation.
Okay. Part of the reason we got to the situation what we're in now with SCANA was because of the Base Load Review Act. What does Dominion have any immediate future plans to use tactics such as cost recovery and projects in the future? How are you guys going to protect the customers?
So that's a great question. So what we've said in our merger agreement is that there can't be any material change that would create an adverse effect on SCANA or our petition in front of the regulators. We're asking the legislature to allow us to create a market-driven business solution to a problem that ultimately was a market-based and business problem. So what we're asking is that the legislature not making the alterations or material alterations to the Base Load Review Act that would have an adverse economic effect on either SCANA or the petition and regulatory solution that I just described. Notwithstanding that, beyond our interest in being able to understand what the playing field is with regard to the rate base of the abandoned nuclear facility and understanding how that works, we're open to having conversations about what the legislature may be interested in doing, as long as it doesn't have an adverse effect on what we proposed on this deal.
Okay. Mr. Brown, before I let you go, what, if anything, would you like to say to South Carolina customers?
What we like to say is that, yes, Dominion Energy is here in part because of the recent challenges that SCANA has had. But we've been in South Carolina for a number of years. We have a very large gas transmission network here in South Carolina. We have solar facilities here in South Carolina. And it's a part of what we believe to be our the southeast region that is growing very rapidly. We're very familiar with the people. We have a very similar culture. And so although we are here now because there's a unique circumstance with SCANA, we're also here because we believe that South Carolina is a great place to do business and that we want to be here and invest here and help to grow the economy and make South Carolina a even better place to live, work, and play. So Dominion's here not just because of the recent challenges that SCANA has, because we want to be here and because we believe South Carolina is a great place to do business.